Good evening, everyone from Midwestern Illinois. It's another day in paradise. There was a giant storm earlier, which briefly knocked out the power, and it was almost pitch dark outside, so it was going to be a little hard for me to make the video with the storm. It is June 10th, Wednesday, 2026. We got the oil inventory report this morning. We're going to go through those numbers. There's also all kinds of war headlines all over the news. Apparently, the war is now back in full force. There was an Apache helicopter that was downed, and I guess that is being used as the reason for why multiple airstrikes and missile launches are now being exacted from us to the theater of the Persian Gulf. This is obviously going to have disastrous consequences moving forward, as it is only going to prolong the crisis that we're already in. We are drawing down inventories at record rates. If I check the actual figures from the EIA release this morning, SPR was down 7.9 million barrels, current levels 349 million, lowest since August of 2023. Cushing's down another 1.1 barrels. Current level says at around 21.25 million, very close to the operational minimum. Commercial crude drew about 9 million. Gasoline down about 1.2 million. Distillates were actually up, so there was a build in distillates of 1.3 million. WTI currently is trading at around $93. It was trading at around $90 this morning, but now it's trading around 93. So crude is definitely going up, and the stock market is taking another hit again. The AI trade seems to be unraveling. If we look at what is really going on, this is what's really going on. We are handcuffed to the seat of the bus while AI is driving, having wild hallucinations on the way to, you guessed it, Nowheresville. That is exactly where we are going. We're being told that AI is going to make the future better and brighter, and it's going to do all these wonderful things for us. But in reality, what is going to happen is that probably most of us are going to find ourselves out of work as AI replaces all the jobs. And then we'll have massive unemployment and nobody will be able to afford anything. So they might roll out a universal basic income or some sort of token credit system. And then that will be completely managed and what's the word? Optimized for our benefit, right? So that is the grand vision of the future. I'm definitely not looking forward to this at all. So if we go through the news headlines and just see what was actually happening, it kind of reads like this. U.S. begins self-defense strikes against multiple targets in Iran. We did get a CPI reading this morning. The CPI was above 4%, so the inflation's completely out of control at this point, but that's no big deal. We have U.S. launch fresh strikes on Iran, so more war news. Then we have a fragile market article. The scary part isn't volatility, it's how little it takes to create it. If we quick check in with the chart, we can see that this thing is rather active already. This is only the first couple of hours into the Globex session, and it's already got a couple 100-point range in NASDAQ, and the activity is definitely fast and furious. You can see that we've pretty much been breaking all morning, ever since around 9 o'clock. So this is now the complete opposite of what the market usually does. So usually we would, dip a little bit overnight and then rally all day. Now we're dipping during the night, rallying a little bit by the open, and then dumping hard. So you can see the crude oil is starting to go back up here. This is a 5-minute crude oil chart. We hit a high of about 93.5 just a few minutes ago. And we have not been here in crude for a couple of days. So if we go to the daily chart, in crude, we can see that the daily chart is starting to turn up. We hit a low of about 86 the previous day, yesterday's session, and now we're about $7 off of that. So the crude is going back up. The gasoline's going back up as well. Gold is getting destroyed. They are selling gold futures aggressively, 40.67 in the gold. There's definitely something going on with the dollar or the interest rates. Gold is under a lot of pressure along with the equities here. This is now day, let's see, one. We'll count the first day as, just a pass, maybe a pause. The second day, maybe a pause. So this will be day number 1, 2, 3, 4. This is the 5th session now where the market is going down. The market generally does not go down for more than 3 or 4 sessions in a row. So now the market's in a down sequence. This is session number 5. This is starting to get quite serious. This could really spiral out of control here. We could definitely see another 1,000, 2,000 point drop in very short order. We do have the SpaceX IPO coming up soon, and that is anticipated to be a positive for the market, but it is turning out to be very poorly timed at the moment. So if we keep going through the headlines, we get some actual financial headlines. Oracle tumbles after mixed results. CapEx comes in hot. More 40 billion debt equity capital raise coming. So companies, although they have lots of money and everything's awesome, they need to raise a lot of money. So this has been happening in some of the bigs. Google, Oracle, OpenAI. There's a push to raise capital all of a sudden. But I thought everything was going, great and everything was awesome. Doesn't seem to be the case. That there's something off here. Another article, this still isn't panic. This is really not panic. So this is not really what a panic looks like. This is a correction. It's not really a panic yet. Because we basically went up for 2 straight months and now we're starting to experience some volatility that may feel out of place. But this volatility is long overdue. And if this keeps going, another week or two of this, and we're going to end up, 2,000, 3,000 points lower, and then everybody's really going to panic, because the further away we get from the high, that just means that the more distance the market would have to make up just to poke people's heads back above water. Anybody that got into this market over the last 5 or 6 weeks is underwater, and anybody that got in slightly earlier, now has almost nothing. They had a nice profit, and now they have almost nothing. So that is the technical picture of the market in response to the news today. Let's real quick go to my favorite widget here, the doom and gloom energy clock. The strait's been closed for 102 days, 23 hours, 26 minutes. 1.35 barrels of crude have been completely eradicated from the supply. I have updated these numbers, so the actual destruction per day is estimated at about 13. We're losing 92 million barrels a week. Global demand remains at 104 with the, elevated but still relatively low crude oil prices. Effective supply is roughly 91. 12.7% has been destroyed. This is 3 times worse than the 1973 Arab oil embargo. Cushing's got about 22 days until it hits its dangerously operational low minimums. 52 days in commercial crude, according to the recent data that we just got from the EIA. We got about 150 days left in the SPR. If we look at the updated bars, we can see that we're at 341 in the SPR. We started with about 415. There's 150 million statutory floor by U.S. law. It's not supposed to go below there. We see distillate stocks 11% below their 5-year average. We've got commercial crude at 4% versus the 5-year average at 419. Gasoline stocks at 213. Not as bad as it was. The Cushing is, remains to be the very serious problem that is going to have to be dealt with. Gasoline prices are still roughly about the same here. I definitely would anticipate a spike soon, as the deadline draws nearer as we start to approach tank bottoms. So this WTI, this is actually 93 because of the rally this afternoon. I updated the model this morning when it was trading around 90. I'm still guessing that fair value for crude is about 210 with the 52-week high at 118. That's significantly over the 52-week high that's currently in place, and the discount is estimated at around 120 per barrel. We shall see what is actually going to happen here. I am definitely not the expert on crude oil, but I do like to use math and analyze the actual numbers and, you know, things like the draw rate. I've got a 4-week average draw rate, so I take the last, 4 entries of draws per week, and then I make an average out of that, and then I compare that against what the EIA reports, what's in there right now, and then I calculate the draws, going forward to update the clock. So it's pretty accurate. As long as the numbers out there are accurate, as long as I can rely that the EIA is producing, reliable figures, then that clock is mostly correct. And I've seen other crude oil experts, people that are actually in the industry, and they're saying that my timeline is about the same. I've heard from the biggest oil execs in the world, Exxon, Chevron, that we're going to approach tank bottoms in about 5 or 6 weeks. So my clock is updated accordingly. What does this mean? This means that this particular phase of the market is going to last for another few weeks, and then we're going to get a new phase, which is going to be a very abrupt shift, because right now the world is still acting like nothing is wrong, and then this is a temporary interruption. We may wake up to the fact that there is no gasoline. And with no gasoline, that means that there's no shipments coming through. With no shipments coming through, that means that our just-in-time way of life, the grocery store, the gas station, our Amazon deliveries that we so rely on when we, want to chill out and watch Netflix and have everything delivered, that is definitely going to come to a grinding halt if the tank bottoms actually go into effect here. So enjoy it while it lasts. Like I said, this is another day in paradise. There's gasoline in the car, and when I go to the store, there's actually things on the shelves. I really hate to be so dramatic and so graphic about what it is that I describe here, and I'm definitely not trying to be Mr. Doom and Gloom all the time, but this is the reality that nobody wants to acknowledge. Hope everybody found that useful. I look forward to seeing everybody again tomorrow on the next video. It's going to be Thursday, and Thursday is usually when the volatility peaks in the market, and we're still going down in equities, so this could get real interesting. Grab your popcorn, sit way back in the chair, and watch what's actually going on here. See you tomorrow. Take care.